What's going on, crypto world? I am back, baby. That's right. I am back with another helpful video. Then this time, I'm going to show you guys how to build some wealth over time. I cannot guarantee. I'm going to repeat this. I cannot guarantee that this will make you rich, but it definitely will get you to get some more returns out of your investments, right? Whether it's crypto, whether it's stocks, in the long term. And that's what we want, right? We want to set ourselves up right now. So in the long term, when we're ready to take that money out, when we're ready to retire, we can retire comfortably. Obviously, we can't time the market. Nobody can time the market. It's almost impossible to time the market. So this is the next best thing. And you can see over here that it is dollar cost average. In other words, DCA. So, what is dollar cost average? I'm glad you asked, right? I'm just talking to myself. But dollar cost average is a strategy, and it's one that almost certainly will get results that are as good, if not even better, than aiming to buy low and sell high. To explain it in simple terms, dollar cost average, in other words, DCA, is a strategy where an investor invests a total sum of money in small increments. So if I wanted to put $100 into Dogecoin, I could put $25 four times by buying it when it's at a reasonable price, and I'm not buying it at the top. So instead of putting all your money in at once, you buy it over a certain period of time in small increments. The goal is to take advantage of market downturns without risking too much of your capital at any given time. So dollar cost average is designed to help negate any losses an investment can return within a short time based on market volatility. If the price of a stock or cryptocurrency drops during the time when you are dollar cost averaging, when the price moves back up, you stand to make a profit because this method will save you from trying to time the market. To get the best price, it's a method that is made for slowly investing. It's not a method that you use to get money like, next month. It's a method that you use to, in the long term, to till when you're retiring, or if you're trying to buy a house 10 to 15 years down the road. So now you're asking yourself, how does it work? How do I do that? Well, look, step one is, it's simple. It's 3 steps. Step one is, well, it's probably going to be more complicated than that. But step one is you choose an asset, right? Whether it's Bitcoin or whether it's AMC. You choose a stock or you choose a crypto coin, right? Step 2 is you decide on the total amount you wish to buy and how much you want to put into these assets. So let's say, for example, you want to buy $100 worth of crypto a month, right? You put that money in there. Or you want to buy $20 worth of AMC every 2 weeks. You put it in there. Step 3 is, instead of putting everything, so let's say for example, you want to buy Bitcoin. You have $1,000 you want to put into Bitcoin. You don't put all of that in there at once. You put it into Bitcoin in small equal amounts over a specific length of time. Some people do that by buying the assets manually. But on the other hand, which I think is better, buying them manually is better. But on the other hand, there's the option where if you guys know what a 401k is, it automatically buys it for you. So it buys it no matter what price it's at, or like a recurring investment on Robinhood, right? It buys it every month, and no matter what the price is at, it's automatic. So that's why I always recommend people to manually do the dollar cost average instead of automatically letting them do it for them. Because if you get an asset tracker, for example, like CoinMarketCap or Stock Alerter, that You turn on your notifications, you track your prices of stocks and crypto, and you track these assets, and when they reach a certain price, you you buy it. So for example, if you're tracking Bitcoin at $45,000 right now, right? And you're tracking it and you see that, oh, it's going to 39,000. So let me buy something right now. Then you wait and you keep tracking it. And then it goes down to $38,000. You buy some more. So now your average is like, you know, $38,500. You have to try to keep your average cost per coin as low as possible. But the thing is, when you do it manually, it requires discipline and consistency. But the first step is to just, is to do the steps that we talked about before. The first step is to choose an asset, decide on the total amount, and put small equal amounts over a specific time. Because if you don't do these steps, you cannot get to that. You cannot get to this right here. Because when you manually do dollar cost average, it is better than the automated dollar cost average. So the logic behind it is, for stocks, let's say you have something in place on Robinhood or, whatever stock brokerage you use to buy AMC every month. The number of shares you purchase each month will vary depending on the share price of the investment at the time of the purchase, right? So when the share value rises, your money will buy fewer shares per dollar invested. But when the share price is down, your money will get you more shares. Over time, the cost per share you spend will probably, most likely, compare quite favorably with the price you would have paid if you tried to time the market, unless you got really lucky and timed it really well, or you have insider information. When it comes to cryptocurrency, doing the dollar cost average is kind of frowned upon because we know the fees with crypto brokerages nowadays have pretty high. They have pretty high fees sometimes, but since crypto is so volatile, you might make up the fee in a few seconds. Not a few seconds, but you'll definitely make up the fee, but you can also lose 50% of your portfolio because of the volatility. But don't worry, from my experience with crypto and since I've been trading crypto, I've made way more than I've lost using dollar cost average, and that's from my experience. I'm not financially advising anyone. And with the wild swings that have occurred in the crypto market during its relatively short existence and its potential for future growth, right? Holding digital assets has been and may continue to be a profitable means of investing. If you want a relatively safe way of benefiting from cryptos or volatility, a dollar cost average strategy is worth considering. In the long run, this is a highly effective strategy. It's a very effective way to invest, and if you buy more shares when the cost is low, you reduce your average cost per share over time, if I'm making sense. Dollar cost averaging is particularly attractive to new investors just starting out. It's a way to slowly build wealth over time, but it's slowly but surely type of investing, right? Even if you're starting out with a small, account. Let's look at this example on the right. You see the cost per share right here is $30. Then in February, the cost per share went down to $10. So you decided to buy 30 shares. When it was at $30, you bought 10 shares, $300. But you bought 30 shares here at $10, still for $300. And then in March, you bought 15 shares at $20. And then it keeps going on. And over time, as you keep on doing this, and this stock or this cryptocurrency coin keeps going up, the average cost per coin or per share is going to be so much favorable to you. You're going to be so much more profitable, right? So, I mean, that's all I have for you guys. I hope this was helpful to everyone who is watching right now, who took the chance to listen to me. It's good to learn these things because these are small cheats, cheats that you get better, that you have to use to get better returns on your investments. If you look at what we just depicted on the right, you see that at $30 you bought 10 shares, but when the share price went down to $10, you got 30 shares for the same price. 300 here, 300 here, but here you got so much more shares. That is so much more favorable, right, in the long term. So, like I said, I hope this was helpful to everybody, and that's all I have for you guys today. You can follow me on my social media up on Twitter, Instagram, and YouTube. If you learned something new today, leave me a like and comment and subscribe for more content like this. If you look on the right over here, I just wanted to share this with everyone. I have 3 goals, right? 3 goals before the year is over. We are currently on August 18th, and I have 3 goals. 3 small goals. Goal number one is to get 300 subscribers at the end of the year. By the end of the year, 300 subscribers. That's easy. I have 114 right now. I feel like I should easily be able to get to 300 before the end of the year. Goal number 2 is, as soon as I get to 300 subscribers, I will be doing a polka dot giveaway. That's right. I'll be giving one dot coin away to my subscribers. Okay. And goal number 3 is, I want this video to, if possible, to receive 15 likes. So that's all I have. Follow me on my socials. Keep up with me and look forward to the next video.